In terms of, I guess, one, where we are, right, and two, the kind of the bigger snapshot, right. Now, the reason that I've titled this video the way that I've titled it is, if you're reading through Twitter or any social media, right, what a lot of people fail to understand is everybody seems to, buy the bottom. Nobody seems to sell the top, right? Nobody seems to exit anything, but everybody's so profitable. The reality is, moves are there to make money, right? And if people are kind of stacking stats, right, and this is obviously how how the world sees this, how kind of retail sentiment sees this. If everyone's stacking these sats, right, nobody's making money, right? And that's, that's just being, genuine, right? I guess people are looking for videos, they're looking for content, they're looking for posts that kind of back up their own beliefs, right? Now, I read one of the editor pick posts last night on TradingView, and it was to do with an Elliott count. I'm not really a fan of Elliott in terms of the log scale charts, right? The count for me is a little bit off, but there's some merit to it, right? And I think this is kind of, where I'm seeing things, right? So over the last kind of 18 months, one of the things that I've said kind of over and over and over again is nothing's changed, right? And the reason that I've said nothing's changed is this is the price action and not the price, right? And these are two, major factors, right? The reason that I keep saying nothing's changed in terms of the price action is I posted a post, 16, 18 months ago, and I basically said we have a couple of very likely scenarios, right? Now, I could keep going over these three options, and I've talked about the three options. One of the options was kind of very beneficial, right? And very beneficial, bigger picture, faster time frame, all the good stuff that most people are looking for, right? The second scenario was kind of slightly, slightly off in terms of the time frame, right? It was kind of a limp kind of attempt in terms of what the price action will try to do, what composite man will seek in terms of liquidity. And the third option was almost diabolical, right? It was kind of, the third option was, if this happens, I've lost an awful lot of interest in kind of crypto in the shorter time frame, right? So with that being said, right, what you have to realize, and again, go back to the kind of the title of this video, is a lot of people seem to want this kind of buy and hold mindset, right? Now, that's great, and in the long run, that will definitely make you money, right? I'm not questioning, not doubting that, right? The attitude and the sentiment that comes with anything that's negative Bitcoin, or a little bit of Bitcoin could actually pull back, Bitcoin could drop down, right? People just don't seem to understand that that's actually beneficial for the market, right? The market needs to breathe, right? The market needs this, kind of breath of fresh air for it to kind of run again, right? You're not going to run a marathon on one puff of air, right? And this is kind of where all of the different sentiment, this is for me, 25 years worth of experience. I've been in Bitcoin since 2011, right? This is where money is made, right? And I done a post a couple of weeks back, right? What did I do? I think it was on actually another chart. I done another Bitcoin chart, which was down on the orange. This one, and I talked about, in terms of going back, way back, right? My first entry was back here, right? I actually sold off a shitload of coins, right? And I mean a shitload of coins, right? At this particular stage, right? The last time I bought Bitcoin was here, right? This was 200 and odd dollars, right? I've had no incentive, no reason, no rationale to buy it since, right? And nothing at all. That's not, I was very fortunate, right place, right time, been in there for a long run. I'm happy with what I've done. I'm 39 now. I'm kind of living out in France. I've been on holidays for the last 10 years, right? This is how I see, it's a nice lifestyle, right? The truth of the matter is, this isn't kind of, marketing collateral. If I was going to market, I'd be, Bitcoin's long, Bitcoin's long, Bitcoin's long. The truth of the matter is, understanding how the markets work, how these cycles transition, the transition from kind of a play thing into the institutional kind of involvement, and the institutional involvement, ETFs and so on, this will also change the dynamic from a bigger picture perspective in terms of how the previous cycles have acted, right? You've probably noticed the last couple of months we've had, slower, kind of more boring weekends. Price action has kind of gone flatlined over that weekend. So you can kind of clearly see the transition, right? Now, one thing that I've talked about a couple of times, right? I come back to the three scenarios in a second because this is really important, and I think again part of what I'm trying to kind of educate you on, right, is when the price breaks a high, right? So you just draw a line across here, right? What you'd actually expect is, a lot of momentum, right? Kind of an upside shift. And the reason for the upside shift is logical, right? Some of you guys will talk about smart money and, how the big banks operate and so on, and not really understand what that means, right? In kind of the fundamentals of that, right? So basically, what happens is you're going to have a lot of stop losses. You're going to have a lot of new entries, breakout traders. You're going to have kind of confidence being built, right, at a high, right? So when we breach a high, you would expect, almost fuel on the fire, right? This for me is one of the concerns in terms of the current price action, right? So in terms of where we are, kind of now, right? I'm just going to go back through, some of these posts. I talked about, and you can see, right? Back, I think this was, 2020, right? I talked about this. It's one of the first posts I could make publicly in terms of not being kind of restrained by my money management kind of obligations, if you will. And posting this out publicly, what I was seeing kind of in and around this time, right? This was obviously the reaccumulation stage, right? The next move up was the first time that I saw kind of institutional involvement from a trading perspective, right? Kind of prior to this particular point, what we were seeing in the market was kind of VCs, kind of angel investors, money managers to a degree, but on a smaller scale. And this was kind of back to the kind of buy and hold type of strategy and hope that this 10x, right? So when we started rallying up to this first peak, this first major all-time high, the real reason for me that it was kind of time to sell off, right? And this is where a lot of my coins have put this in here. I got nothing to hide. I sold a lot of coins here, right? And the reality for this was I kind of didn't know where we were headed, I guess, bigger picture, right? This was still, kind of early on in terms of this transition. And it was the way for me to take, a nice amount of profit out of the market and kind of say, hey, Bitcoin owes me absolutely nothing, right? This is a great position to be in, right? So this is kind of, buying low and selling high, right? And this is kind of, what a lot of people talk about, the holy grail, right? Now, when I posted this particular post and talked about the rocket being blown up, I talked about, simplicity in terms of the move. This was right at the peak, right? And the reason that I was shorting this is not I shorted this to go against Bitcoin. This was me selling coins that I owned, right? This wasn't me selling into the market on a short position. This was me selling off positions that I held, right? So the reason for it was pretty obvious in terms of the transition, right? And again, this kind of keeps coming back to the same old, right? I called for this move down, right? This was obviously the 28K. We then rallied up. Now, as we rallied, a lot of people at this particular stage, right, kind of crypto, Twitter, all the sentiment of retail was all calling for 135K, right? How's that working out for you guys, right? It's not. It clearly hasn't, right? I posted a post the other day on Twitter and I basically changed Bitcoin for a house. Right? I said one of my good friends had bought a house at 69K. The kind of feedback that I had and the kind of responses that I was having, oh, the guy should have bought Bitcoin, right? Well, all I'd done was replace the word Bitcoin with a house, right? A property, right? An investment property. I said, oh, a good friend of mine had bought this property, 3 years ago. He paid 69K. It's now worth 70,000. What do you think? Oh, the guy should buy Bitcoin. Oh, this has gone up and properties are not worth anything anymore and this, that, and the other. We are nearly 3 years down the line, right? And we currently at $70,195, right? That's basically a $1,100 gain, right, over that period of time, right? Now, a lot of people say, "Oh, well, if you bought the bottom, I bought the bottom, right? I mean, apart from being in Bitcoin, kind of right at the start, right? I couldn't get really any more bottom, right? So, in terms of where we are now, this is what a lot of people fail to see, right? If you're just stacking and you're DCAing into a position, right? Crack on, right? And that's a great opportunity for the long run. If you're trying to make money out of every swing, right? You do realize you have to exit these trades at some point, right? Now, what you really want to be doing is exiting when the prices are green, not red, right? A lot of strain, a lot of pressure comes on, as we saw from this, right? I was getting, hate comments, right, at 69K. Oh, you're silly, selling the top, it's only going to go up forever. And, the reality is, guys, we dropped to 15K, right? If you're looking at someone like Plan B that was calling 135K, worst case, within a month. The reality is, 135K, you can subtract that from, or the 15 from, right? It's 120K out, right? In terms of a caller position. And it's nearly 3 years. Right? So we've kind of moved on back to this as a situation. We've come up, right? Now, I'm going to go back to the kind of the three scenarios. Just on a clean chart, right? Part of the reason that I said the best option was at this particular point, right? We come down a little bit deeper. We spend some time. We kind of rally. We come back and retest, and we go. Right? That would have been the optimal solution, right? Painting the Wyckoff accumulation for a large scale move, right? So that was kind of option number one. The second option, right? And this is what a lot of people don't understand, right? Especially because we've broken an all-time high, kind of at this position, right? A lot of people fail to understand that when you're looking at Elliott moves, Elliott is not, for me, a technical analysis tool, right? Elliott is kind of the sentiment of the market. And this is where a lot of people fail to see it, right? If you're trying to use Elliott for every little swing, every little move, right, you're going to lose yourself in your own kind of, confusion, really, right? You're going to confuse yourself beyond comprehension, right? If you can use Elliott wave type counts for a larger scale sentiment analysis, right? It gives you just a bias, right? So, with that being said, I'm going to look at one of two things, right? If we were to be, honest, right? And this is where a lot of people, again, everybody's winning, everybody's making money, everybody's stacking when it's kind of down low, and everybody's, profiting 1,000% and 10,000% when it's up high, but nobody's selling, right? These are the kind of things that you need to just, kind of be aware of, right? If we come from a 0 point, right, we come up to a 1, we come back for a 2, we come in 3, we come in 4, we come in 5, right? The beauty of this is this creates a larger scale 1, right? Now, some people will say, oh, well, if that's the 1, this is the 2. And, it's plausible, it's possible, right? It's just potentially, based on the size, we've come from the inception through to 2021, right? So 11, 12 years for a move 1, right? If you want Bitcoin to go to $1 million, $5 million and beyond, right, to infinity and beyond, what you have to understand is the time factor is quite critical, right? We're going to have things like regulation. We're going to have the ETFs, ETFs are asset managers, right? And again, this is kind of the big picture compared to leverage funds, and I've talked about them in my posts, right? So, with this being said, right, the second option was potentially this being a B, right? The first B target was this, right? You then had another one about 55K, which is about here, right? And clearly we smashed straight through it, right? Now people say, oh, well, you've called for a short. I'm not saying short, right? I'm saying this is the situation, right? This is the second option. And for me, I still like this second option, right? And the reason I still like this second option is if we come into the rules, we have what's known as a running flat, right? If you scroll down into this, right, and this is just the elliottwave-forecast.com, right? If you scroll down and you look at the likely situations, right, wave B can easily be, right, 123% wave A, right? A lot of people say, oh, well, it's not a corrective. We've taken a new high. Well, watch this, right? And I put this on, get rid of some of these, right? And what I'm going to do now is I'm going to use the extension tool, right? And I'm going to forecast from there back in and back down, right? This is my wave A, right? Where are we in terms of a 123% for a wave B? Right? There's your target kind of level, right? Kind of your realistic level is about 82,000-ish, right? That still plays ball for a running flat type move, right? Now, as you can see, C does not have to come deep, right? So I'm not calling for 12K, I'm calling for 8K or the end of Bitcoin or anything stupid, right? The reality is, you got to look at where this could come back to, right? Now, you could clearly see, right, there's going to be liquidity in and around here. There's going to be liquidity in and around there. And the fact that we left a lot of liquidity down and around this region, which means it's very easy to come back for a retest before we then start seeing a 1, a 2, a 3, etc., right? Taking us beyond 100K, right? Now, I know for a lot of you, if you want to comment and you want to, put, oh, you said this and you said that, right? Crack on. But if you haven't watched this and you're not willing to sit through this, you're not going to understand why these moves play out the way that they play out, right? So, I'm going to say this for you guys watching. Anybody that makes a comment on anything other than this within the first, whatever minutes this is in, right? This is, what are we in right now? This is 17 minutes in. If you haven't watched up to this particular point, right, then just don't bother commenting, right? In terms of where we are, right, the issue for me is liquidity, right? And it's all about liquidity. So this was why option 2 for me is not quite done, right? Option 2 is still, very, very plausible, very, very likely. We could easily see a run up, right, followed by a drop down, right? Drop down into liquidity, right? So what I'm going to do is I'm going to put one of my indicators on, right? What I'm going to do is I'm going to show you this indicator in terms of the current, pockets of liquidity, right? Now, as you can see, what we've got, right, this is just, purely a volume profile, right? You can put this on through TradingView, come into fixed range volume, for example, you'll see the range, right? So what we've actually got is, practically nothing here, right? This is kind of a tapering off as we near, right? This is kind of running out the steam as we move into the station, right? The optimal place for distribution, right? We've got leverage funds, which are the shorter time frame institutional players currently selling, right? Now, this for me is this is different, right? Selling off in terms of coins you've bought down low, right? Or down low, right? Or down low, right? Is completely different than shorting the market and what retail would regard as getting wrecked, right? Getting wrecked has made me a shit ton of money, right? And that's the beauty of it, right? It's, you're not getting wrecked. You're actually selling something you bought for an awful lot cheaper. This is wholesale selling to retail, right? So with that being said, we can easily target 81.5, 82K, right? And we still be in a running flat situation for a pullback, at least down into liquidity, right? There's an awful lot more in and around this region, right? Personally, I like 23, 23.5, right? That's the kind of region. You're going to get comments. I know comments will be, oh, we never going down there again. Well, guys, that was all said back here, right? And we come down to 15, right? Truth of the matter is the market's going to seek this liquidity, with or without you, right? The market is going to chase this. Now, maximum pain for a lot of retail traders. I read one of these on-chain matrix kind of reports and see in the chart, and the average buy price currently is around 44K, right? I know Jamie Dimon called for, I think, 42K as kind of a key level. And if you stick 42, 44, on the chart, right, it basically comes back, all the way, right, to the kind of the pocket there of the liquidity. You've clearly got a little bit of liquidity underneath. You've got some gaps, right? You've got a massive pocket underneath that, right? So there's an awful lot there. And, what you'd run the danger of is the price drops and people, buy the dip, right? Price rallies back up, it doesn't come as high, right? Drops back down again. Oh, I'll buy the dip, right? And you see this from the influencers kind of over and over again, right? It's, they've bought this and they've bought this and they're trying to buy this, right? None of them are selling at this particular point, right? But on the social media accounts, everybody's winning, right? Everybody's kind of the winner, right? So in terms of where we are, right, the second option and the second play is potentially running flat, right? Running flat, that takes us, like I said, up to 82k potentially, right? We don't have to go above this, but we can see a change in character from there, right? So my current preferred option, right, given we didn't have the accumulation down lower, is that we potentially see something along this line, right? And then back down, like I said, into, this kind of region, right? Which is the potential, kind of next play, right? So what I'll do is I'll take a screenshot of that, I'll copy the link, and what I'll do is I'll put that into, actually put that into that one there, right? So that for me, right, is I'll share this actually as well in the chat. Here you go. Okay, so with all this being said, right, this is not, like I said, negative, right? This is kind of, for me, almost the best situation right now, because the third situation, right, the third scenario, and this is why I said it was kind of diabolical, right, is if we were to have this as our 1 and this is our 2, and 2 was actually in, right, so we haven't got an ABC making a 2, over here somewhere, right? The issue that we have now is you're going to have to do an internal count, right? Now you can count a 1, 2, 3, 4, and 5, for example, right, giving us a 1, right? You can come back A, B, C, giving us a 2. We can come up, right, the extension works to a 1, 6, 1, 8, 3. We come back down, it's the opposite, which is quite fast compared to a slow 1, 2, which gives us a 4. And the extension, right, this is going to be interesting, right? The extension there works exactly on, right, a 2, 6, 1, 8. One of the golden rules of Elliott, right? One of it's not a golden rule. One of the golden kind of pockets, if you will, right? It's not a rule per se, but it's kind of an expectation, right? So at this particular point, right, we've kind of tagged back up at the area, and we've kind of run out of steam, right? We've got 12 ETFs being approved. We've got massive inflows. We've got this huge multiplier. We've got the halving coming soon, and yet we're kind of dancing around an all-time high that we saw, near enough 3 years back, right? So the reason for me that I've just covered this, and the reason I'm going to do this a bit faster, the reason that I've said, right, this is the biggest kind of concern or the dilemma for me, right, is that if this is our 2, then we've got a 3, right, because we've just counted inside. You can't miss a count as, well, this one doesn't count, I'm going to start my count from here because, well, why not, right? You're going to have to go from the lows, right? This is kind of the principles in terms of Elliott kind of count, right? So if we've got our 3, the issue that we then have is that we can't technically break below this level without invalidating a 4, right? Which means if 4 comes down at any kind of pullback, we come into the 50k region, for example, the issue that we have is that the main count up is kind of invalidated. Now, what you'd have to do there is you'd have to look at, the bigger economic factors, right? Are we going to see a COVID-2? Are we going to see a world war breakout? Are we going to see regulation come into the crypto space, right? Are we going to see, BlackRock issuing their own blockchain technologies, for example, and almost ignoring Bitcoin? These are the kind of things that, they're not, likely. They might never happen. But the reality is you're going to have to keep these things in mind, right? Because if this is what we see as bullish, well, bullish is kind of doomed, right? Which is why it brings me back to the second scenario for me is still the preferred scenario, right? Is I'd like to see, an A there, a B potentially up a little bit higher, a C back down under the liquidity into this kind of region, right? And then at this particular stage, what you can do is you can zoom out, right? And again, this becomes really, really interesting then, because at this particular point, right, what you can do is you can start to put another count to the bullish side, which is where the bigger cycles now come in. Because what you'd actually be seeing is if we go from this point to 2, we'd actually come up with a 1 probably just past these again, right? We'd break back down for a deeper 2. And then the 3, as I said right at the start of the video, the 3 you'd expect to accelerate the same way as we saw this here, right? So as the price rallies past the 1, you'd expect an accelerant into 3, right? Now, if I was to just do this, on a basic count terms, right? If we were to see something like I've just drawn out there, we could then suggest a 1 just beyond, a 2 back down, which would put us probably at a 135, right? We'd probably come back down for a 4, potentially into the 90k region, and then we can go up 200k, right? And even if we saw something like this being hyper realistic, right, that would be a preferred move, right? Because at this particular stage, what we would then see is a move back down for a 4 into this kind of region, right? Because again, look at where the liquidity would sit, right? And then at that particular stage, you can go again, for a much greater 5, right? Well into the future. Right? That for me is why this option with the kind of extended C, the running flat type C, it actually makes a bit more sense for the bigger picture, right? If obviously people assume, I've kind of shown this, time and time again. I just wanted to put this together, given this is one of the last streams that I'm going to be doing on TradingView, right? Given they stopped it on the 7th, right? One of the things you got to look at, right, is how ridiculous some of these calls are, right? Now, a lot of people say, "Oh, Elliott doesn't work, or this doesn't happen, or this isn't going to happen that way," right? Let me stick 135k, right, on the chart. Let me stick the December 2021, right, which is where Plan B was calling for this 135k region to occur, right? What you have to understand is we had this kind of colossal rally, right, from the reaccumulation phase, right, here. We had a slope, right? This slope was clearly the Wyckoff distribution, right? Now, what makes you think you've come up from a rally that the price was going to go from this level to this level to this level and all of a sudden do this, right? How insane, right? How silly. So what you have to do is just take a step back, be a bit realistic, right? This is going to be something that will transition over time. If you're DCAing in, right, great, wonderful, right? If you're buying and trying to trade every move, be careful, right? Now, I want to finish this video kind of there, right? Because I think for me, I've covered this kind of enough, right? I know this one's going to be deleted from TradingView, like I said, as of the 7th. So again, if you don't follow me on YouTube, go into the signature, scroll on down, right? You can come in and see my YouTube link there, right? So in that sense, guys, look, right, I wish you luck, right? I wish you the best. And, just be careful out there, right? I think that's kind of my biggest point, right? This isn't going to go up forever. It's going to go up in the long run, right? But you're going to have some of these kind of pullback moves regardless. Right? Now, if obviously, you're not kind of keen on that, you kind of think, oh, well, it's only up, then, I kind of feel sorry for you in terms of where we go from here. I think next step, we're going to need a pullback of some description. The question is going to be into liquidity. You're going to get confirmation once we start seeing that move down. A lot of people say, oh, never again 50, never again 40, never again 30. Guys, I'm old enough, kind of long enough in the tooth to say, I've said it once, I've said it twice. Things don't change. Human behavior doesn't change. Sentiment doesn't change. Retail greed doesn't change. All of these good things don't change, right? We were never going to get, under 40k, under 50k, under 30k, at this particular point, we hit 15, right? The market is irrational. The market will be irrational, and the market is not there to serve the people, right? Just remember that. Stay safe, right? And I'll see you on the next stream. Thanks for watching, guys. I'm just going to check to see if there's any questions. Yeah, so I think in terms of the cutting the streams, I think what I understand is I think that they're actually doing it as video ideas, right? So I think that's kind of the main point. It'll be video ideas rather than streams. So we're just going to shift the streams over to YouTube, myself and Paul, and do the streams anyway. We probably do a couple of video ideas, but I think the problem that we have with the video ideas is that we'd have to record the video and then get the kind of the comments and the feedback kind of later. Whereas obviously being able to chat to you guys, like this is much more valuable kind of all around. So yeah, thanks for that. Nice message. And obviously stay safe and see you, like I said, on the next stream. So again, thanks for watching, guys. See you soon.